Asian stocks fell Thursday after the Federal Reserve warned Donald Trump's trade war would likely reignite U.S. inflation and dampen economic growth, while oil prices edged down as investors awaited developments in the Israel-Iran conflict. While geopolitical tensions are the key focus for markets, traders were also watching the U.S. Central Bank's latest meeting Wednesday, as officials gathered to discuss monetary policy in light of the president's tariff blitz. The Fed kept borrowing rates on hold for a fourth consecutive meeting, as expected, and said in a statement that uncertainty about the economic outlook has diminished but remains elevated. It later cut its economic growth forecast for this year and raised inflation and unemployment expectations in its first updated projections since Trump unveiled his levies on most trading partners at the start of April. Boss Jerome Powell called the economy still solid, but added that increases in tariffs this year are likely to push up prices and weigh on economic activity. He said the bank was well positioned to wait to learn more before considering changes to rates. Still, the Fed's so-called dot plot chart predicted 2 cuts this year. Ultimately, the cost of the tariff has to be paid and some of it will fall on the end consumer. He added, "We know that's coming and we just want to see a little bit of that before we make judgments prematurely." With Trump increasingly calling for the bank to slash rates, Powell said, "We'll make smarter and better decisions if we just wait a couple of months." Hours before the decision, the president said, "We have a stupid person, frankly, at the Federation." Speaking at the White House, he added, "We have no inflation, we have only success. And I'd like to see interest rates get down. Maybe I should go to the Federation. Am I allowed to appoint myself?" The Fed's assessment indicates that the economy is in good shape, aligning with current economic data, said Tai Hui at JP Morgan Asset Management. However, trade policy, fiscal policy, and unintended consequences of policies from the Trump administration are contributing to market volatility in the second half of this year. After a tepid day on Wall Street, Asian markets turned lower. Hong Kong led losses, falling more than 1%, while Tokyo, Shanghai, Sydney, Singapore, Seoul, Wellington, Taipei, Manila and Jakarta were also in the red. The Fed comments compounded the already weak sentiment on trading floors as Trump considers whether to join Israeli strikes against Iran. He indicated he was still looking into such a move and that Iran had reached out seeking negotiations, saying, "I may do it, I may not do it. I mean, nobody knows what I'm going to do." Without providing more details, he added, "The next week is going to be very big." Iran's Supreme Leader Ayatollah Ali Khamenei earlier sounded a defiant note, rejecting Trump's call for unconditional surrender. The situation described falling Asian stock markets, Federal Reserve caution, rising geopolitical tensions, especially between the US and Iran, and fluctuating oil prices, has several indirect but meaningful impacts on the Iraqi Dinar, IQD, especially through oil markets, regional stability, and foreign policy alignment. 1. Oil prices and Iraq's budget. Iraq's economy is oil-dependent, with over 90% of government revenue coming from oil exports. Geopolitical instability, like potential US-Iran conflict or threats to the Strait of Hormuz, usually causes oil prices to rise